Hello everyone and welcome to this special presentation titled Going for Gold. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and of course I'm delighted to be your host for this presentation. Listen, as we had a great write-up in the VectorVest Views this past Friday, July tends to be sometimes a very good month, but also a very unpredictable and volatile month. Many of us that have been around VectorVest for years and years may remember essays written by our founder, Dr. Partolito, that were titled such as the July high phenomenon, right? The July high was the name of the essay. So the market can actually tend to peak in the month of July here on many occasions. We also have the election coming into full view. We've got an accommodative Fed putting pressure on the dollar. We've got earnings season. We stand just on the precipice of that, and what will probably amount to a lot of rather poor news, albeit most of which is expected. But with all of that comes a tremendous amount of uncertainty, right? And so gold still certainly should then have a place in your portfolios. The question becomes, if you haven't already bought some, because we've been bullish on gold for quite a while now, when is the right time and what are the best stocks to buy? So we're going to cover that ground in this presentation today for you. Let's get right into it. The first thing I want to do is bring to your attention the most recent essay that we've written up applicable to gold. There are many, okay, but the most recent one coming on May the 8th, 2020, where a portion of the essay was titled The Gold Bug's Timing System. And so this will help address, of course, the when. Let's get right into that essay. So first thing, I'll go right up to the top in VectorVest 7 and go to the Views tab. On the Views tab, notice that I'm on the May 8th date. Okay, so you can use your calendar to get back to May 8th here. When you do that, here is the title that I was seeking out, The Gold Bug's Timing System. You got to scroll down a little bit to get there, okay? And it leads off with a very important statement. It says here, a weakening economy and a fearful sentiment have historically pushed people into investing in commodities like gold. But gold is very volatile, right? And so oftentimes people are real fearful on adding gold type instruments to their portfolios because of that volatility. Well, as I mentioned, and as is mentioned, of course, here, we report on gold every Monday in the Daily Color Guard Report. So stay tuned to that if you're somebody that has either bought gold here in the recent past or is still looking for a good entry here in the near future. Keep that report in mind. This essay also went and dug into some performance in terms of gold. And then I love the moral of the story here. It says, the moral of the story is that you can make money in gold without buying an ounce of it. Just make sure that you're timing your entry and exit points with the Gold Bug's timing system. So let's get into that and really hit that point home for you. So in order to find the Gold Bug's timing system, the first thing that we need to know how to be able to do is, of course, go to the Graphs tab. Once you get to the Graphs tab, we're simply going to type in the Gold Bug's index symbol, which is called the HUI. It's HUI. Okay. Notice when I come down here, that indicates that it is in fact the Gold Bug's index. When we click on that, it will produce a graph on the screen for you. Now, the candlesticks running through the top portion, that of course is going to be the price of the index, which is only reported at the close each day. That's one thing I just kind of want to throw right out there. The other thing I will say is we built a specific timing model for gold years and years and years ago. But you can access it over here on the right from the graph control panel. And so when I open that up, we can scroll down and click on Midas Touch. Okay. Now, Midas Touch puts a few what might seem like foreign indicators on the screen to some of you. Notice that when I hover my cursor over one of the lines, that it's going to tell me what it is. Okay, so this is a moving average 10, but not on price, it's on stop price. So if you're not aware, stop price is already an adjusted moving average. So what we're kind of doing here is double smoothing that average with a 10-period look back, which is still fairly responsive. Then you'll also have this red line here, which is a 65-day. Okay, because gold is so volatile, we're using a couple of moving averages to kind of smooth that price action out, realizing, we don't have to try to maximize our investments in gold all the time. What we need to do is participate in the juicy parts of the rally. So we're going to use these moving averages under the same technique that you normally would use any moving averages, right? We're going to look for when the short term crosses above the long term, as it did back here most recently in late April of this year. We have a confirming indicator on the bottom. Any good timing model is going to have some kind of confirming indicator to say, yep, this looks like a good and valid crossover on the top graph. So you'll notice that it says relative timing, but this isn't your traditional relative timing. Here again, we've applied a moving average to smooth even that data out. So we've got a 40-period look back on relative timing here. Okay. Now, in order to get signal, we want to see the 40-day relative timing average above 1 to confirm the moving average crossover. And so let me go and make sure we're on 420. We are. So here you have the price moving average crossovers along with the confirmation of the relative timing moving average to confirm. So this was your most recent date here, or signal, on 420. Okay, and we've been bullish on gold here ever since. Gold did sag a bit here for a little while as it kind of got up. If anybody follows gold by the ounce, it's really been teetering right at that 1750 to 1800 mark, and has been more kind of flattening out here recently, but looks poised to potentially break through. And you're seeing the same kind of action here with the Huey. Prices are getting pegged up here against what is some short-term resistance. Okay, so ultimately, if we haven't invested in gold as we should have back on April the 20th, what we'd be looking for here is a break of that resistance area, that resistance zone. So we can see some of the highs on these candles here are coming in at around 303. Okay, so once the Huey starts to move up and out of that zone, then I would feel good about buying any new opportunities on gold. A slight bit of hesitation here to be sure with the 40-day moving average of relative timing sloping downward, but also look at the level. We're still at a 1.5. It's a lot like the stock market right now, where you had an MTI go all the way up to 1.8, has receded back to 1.6, but the wheels haven't come off yet, right? So gold blasted off just like the market did, because ultimately, the miners got beaten up pretty significantly as well. The breakout, I think, is the catalyst here, long story short. To make a case for that, let me go ahead and go to the top here. I'm going to go to a end of day all data graphic. Okay, and when I do that, if we just kind of look back at 2009, we all remember that's when the last bull market began in the stock market. And you can see here that the initial blast sent the 40-day MA of RT skyrocketing to what should be, its high watermark. And did gold stop rallying? No, it kept on chugging, right? As a lot of monetary easing and things were, of course, underway back at that time, just like they are now. Okay, and so you might see lower high watermarks on the 40-day of the RT, but I wouldn't get too nervous about the gold instruments until we start making a much more egregious move back towards and potentially below 1 on the scaling there. Okay, because you can see that in fact took several years before we got any real meaningful pullback in gold. Okay. Also, the thing that I'm noticing here is we actually hit an even higher watermark than the prior surge with the 40-day. And so here again, you know, you're kind of seeing more of an elevation of the indicator overall. So all of this to me means that when we come back to the 3-month graph, any kind of break of resistance here, and I think that would be my current catalyst for obtaining any kind of new gold positions. Okay, so with that in mind, what gold positions should I look at attaining, right? Or putting into my portfolio? Realizing, guys, I'm not saying take all your money and put it in gold. That's not what this is about. This is about, you know, some spot in your portfolio, there's a place for gold, you know. So where do I go to find it? Well, there's 3 places. I'm going to show you 3 different ways. First way, super simple. I'm going to go right up to the Viewers tab. On the Viewers tab, we're going to come over here to the left to Industry Viewer. Okay. So it's right here in our panel on the left-hand side. When I go to Industry Viewer, the fastest way to find gold is going to be to sort by name. Just click on the name column, the industry column there, and just do it twice if you want to make it easy on yourself. And unless you could say your ABCs backwards, right? So let's keep going, and let's find gold. And it's going to be under mining first, actually, guys. So mining, gold, and silver. Mining is the sector. Gold and silver is the industry within the mining sector. Okay, so that's where you're going to find some good potential stocks to buy. So what I'm going to do here is simply right-click and view stocks and industry group. Right-click and view stocks and industry group, or you can just double-click the row when you're on the industry level. All right, so if I just double-click, it'll pop up, and the best stocks to buy right now would, of course, be at the top of the list. So you've got Harmony, Equinox, you know, some great stocks up here, actually. And the reason they're at the top, they've got the highest VST rating, the highest combinations of RV, RS, and RT. Now, one attribute you're not going to find very common in the gold space because of that volatility are going to be high relative safety scores. You know, so indicators like relative timing and then even relative value are going to become much more valuable to you in terms of insight. So companies with high RV tend to have good earnings and earnings growth rates, certainly being on display here. Okay, very strong growth with a lot of those companies, right? Look at that RV score on Equinox, and then look at the earnings and the earnings growth rate. All right, so that's one major attribute of high relative value. Now, the other thing, of course, is the timing. Ultimately, we want to buy what's hot, you know, and so a good combination of those factors can simply be found by using VST, right? And so there is certainly still some fundamental quotient in the formula here. I'm just pointing out that safety is typically not one of the main components of a good gold stock. All right, so with all of that being said, one thing that we can do just to look at some performance is go back to the most recent signal. And this was part of that write-up in the essay on May the 8th. But if I go back to April the 20th, that was the date of the most recent bullish signal on gold. Here are the stocks that it would have found for you. And boy, you got a good one right there at the top with Kinross. But also, you know, great stocks all the way down. These are the top VST stocks at that time. If we quick test, say, the top 10, here we'll find that from 420 up to the current time, this basket of 10 stocks has gone up 30%. And oh, by the way, what tends to be everyone's favorite on TV was the worst performing of the bunch. Okay, so that's value add to VectorVest subscribers, is you can find stocks that are going to do a lot better than what folks are going to traditionally point you towards. Okay, so DRD performed the best here. And then Goldfields was not far behind, and so on down the list. If we look at some of the graphics here, one thing you might not know is you can right-click and view a stock graph from here. Boy, look at that nice run on DRD, okay? And you can just kind of glance down through the graphs. Goldfield's still showing strength even today. And that's a nice attribute if we were on trigger to buy today, right? So these are certainly going to be some stocks that I would still keep an eye on, even though the best time to have bought them was back in April. These are the ones that are doing the best. You know, there's nothing wrong with just going with what has worked, right? And so that's a very easy way to get right to the best stocks, right? You go to viewers, industry viewer, sort alphabetically, find mining, gold, silver, and the best stocks are right there at the top of the list. Another thing that you can do, if you really want to favor the momentum, well, CI is defined as price growth persistence, right? And so these will be some of the better longer term charts that you're going to find in this whole space. And so what I can do is graph them up, and there's your DRD, you know, still right at the top. So DRD clearly, you could have been found as the very top stock. Like if I wanted to cherry pick, that would have been the very top one, and it was the best performer from the VSTs, right? So a good VST CI combination looks like it's a good way to go in terms of favoring some good positions here, you know? And so, you know, we can do that. You can come up here and you can go to VST times CI, for example. And we'll just use the Chappell's Champs sort, VST times CI times growth. You know, what a great combination. Let's see what that gives us here. We'll quick test them all, and lo and behold, we did a little bit better. You know, at least in terms of overall performance on all of the different stocks. You know, our worst winner was 10%, you know, in this case. And so that could be a very, very nice way to go about picking some great gold stocks to buy. All right. Many different ways that we just showed you there, all of them good ways to go. Okay, so with that, if you want to take picking individual stocks out of the equation, you can do that. And the best way to go is going to be over here to the left in Watch List Viewer. In Watch List Viewer, there is under ETFs a whole folder of gold ETFs. All right, and so first thing to learn here is if I scroll over to the right is volume. Volume can be very light on lesser known ETFs or emerging ETFs. And my goodness, there's almost as many ETFs as stocks these days, it seems. There's not, but you know, if they don't slow down before long, there might be more. I don't know. But the thing to think about here is to sort by average volume, because that's going to push towards the top the ones that you really want to be focused on. So you've got the GDX, which represents the gold miners. You know, you've got some leveraged gold miners by way of Nugget and so on. Many of you might want to go just pure underlying asset, right? And instead of taking on the risk of owning the individual companies, I don't know how many people followed something like a JNUG after the pandemic. I certainly did. It was a terrific buying opportunity, actually. Let me show you what happened to JNUG during the pandemic. You know, so the miners, in particular the junior miners, but really all the miners went under significant pressure, just like any other stock. I mean, you got to close the mines. They can't go down. They can't get the gold, you know. So if you want to prevent that kind of a potential situation in the future, you can just go direct asset. And so you have things here like GLD. GLD is going to give you one-to-one performance. I'll show you the way to check that here in a second. But GLD, if I scroll down here a bit, UGLD is going to be triple and UGL is going to be double. Those are all direct asset. And all of them have good volume, okay? At least enough to get the job done for you. So let me show you something quick here. First things first. UGLD, now this is the triple, but I want to show you how you can figure out if these funds are leveraged or not. What the trick is, right click, go to View Full Stock Analysis Report at the top, And in the business description, it will tell you. So this one says 3 times. So this is triple leveraged. That means when you're right, you're going to be really right. You're going to get 3 points of good action for every 1 point that market represents. When you're wrong, you're going to be really wrong. And so what you're going to end up with is a more volatile underlying asset, right? Here, if we go back to, let's go back up towards the top to just GLD rather. If I right click, view full stock analysis report, you're not going to see anything in here in regards to leverage. Okay, so that's just 1-to-1. Now, let me show you what this amounts to on a graph so you get a better understanding for some of you. Some of us are visual learners, right? So I'm going to go to, I know I am actually. If you go to an individual graph here, I'm just going to go to the top left and go to performance graph. Okay. Now on a performance graph, what I'm going to do is add those other 2. I'm going to add UGL, which is the double, right? And I'm going to add UGLD, which is the triple. And we're going to look at all of their performance, and we're even going to do that since April 20th, right? Which was the date of the signal to buy gold the following day. So the first thing that I want to point out is each of them are represented as a different color. The single is the green line here, and we can see that that green line stayed pretty safe and consistent all throughout the course of this graphic. So from a buy and hold perspective, it's always going to be best in most situations, unless you're catching super strong trend. That's when the doubles and triples come into play, just to buy the single, okay? When you start to get to the double, we can see that the peaks and valleys become much larger, and then when you get to the triples, even larger so, right? And this actually went fairly significantly underwater at minus 7.5% compared to just down 1% at any given time with GLD. Okay, so hopefully that paints the picture for you, and that will then help you decide what side of the fence that you lie on, because while it's been the most safe and consistent, the triple, because gold has gone on the move here again recently, has outperformed nearly 2 times from a buy and hold perspective. So at some point, the triples will take off. The question is, can I deal with the pain to get to the other side, right? And if you can't, you go single or double. Some of you might, well, I kind of want to maximize my potential here, but I don't want to take on exceeding risk. Then you might go with the double. Long story short, if you don't want to go picking individual shares, you realize that gold is extremely likely to become more valuable and you want to go about it in the safest way possible, GLD might be just what the doctor ordered. Okay, those of you that want to throw caution to the wind can pick from the doubles or the triples, right? All right, so with that, you also then do have some minors in here, and so the JNUG and the Nugget are the 2 that most people gravitate towards. JNUG, the J is for juniors, the junior miners. So it's a little bit more speculative, tends to perform a little bit more strongly on occasion than Nugget, which is also the miners, but the more robust companies, okay? And so, those are investment vehicles if you're interested in going, along with the miners as part of your, the way you want to play gold. All right, so that's the second way. We can come right to the ETFs and, we can graph them and we can decide when we get trigger from the Huey that it's time to buy gold again. Let's get that new high, right? We can come in and take a look. Now look, JNUG's having a pretty good day today, and so it's been a strong mover, guys. It really has. So, there's a time and a place for these here as well. This is just what I want to point out. All right, now with all of that intel, one final stop. I'm going to go to Unisearch, and for sake of time here, I think I'm running a bit long. I just want to point out that in Unisearch, you can search for them. Alphabetize the list, probably the easiest way, okay? Just go to the top, hit the A to Z button, scroll down to the G section, what I'm going to do is click on Gold Digger is what I'm going to go find first. So you got a bunch of different gold plays in here, even bearish gold plays. Remember, anything with a green up arrow is bullish, anything with a red down arrow is bearish, okay? Gold bugs, that is like bottom fishing. That would be best used when gold is actually coming off of a bottom or very early on, so would have been much more appropriate back in the April time frame in terms of bottom fishing for gold. The reason I say bottom fishing, this has, when we run the search, it's putting the lowest VST stock at the top of the list. Okay, so, look at your value, look at your RV, look at your RS, look at your RT. You're typically not going to get very many good combinations there. That works best after gold has already been blasted and is then starting to blast up off the bottom, right? It's already been decimated and is starting to blast. Gold Digger, it's also a good way to go in conjunction with the Gold Bugs timing model, okay? If I go to April 20th, click on OK, run the search, quick test the top 10, 46%. Okay, 46% right here from the search. And yeah, 111% at the top. Worst gainer is 21. So this is even better, at least across the board performance than what we saw just, manipulating the industry viewer earlier. And if we then come to the next one, this is good gold stocks a little bit. And boy, look at that search at the top. So VST times CI. Weren't we looking at that, kind of concept in the industry viewer earlier? So interesting that one of our tried and true, VectorVest Unisearch searches has, at least that portion in the sort. It then favors the lower priced ones, which is different than what we did. We looked at exceptional growth rate in combination. This is looking at low price. So let's see what happens. We're going to click on quick test and boom, 27%. So you're doing 2 to almost 4 times market performance with these gold stocks here, And so gold, I still believe, certainly has a place in everyone's portfolios for this reason. Again, the best time to buy it. Let's get that breakout, on the Huey. And for those that watch gold by the ounce, you start getting up into the 1800s and rolling. Those two things should collide on one another. They should happen at about the same time. Okay. All right. So that's going to wrap things up for today. Thanks for coming in and getting hopefully some good insights here on not only the best time to start thinking about buying gold again, but also some of the best stocks and where to find them. And as you saw, VectorVest makes it easy. We'll see you guys next week with the next special presentation. See you then.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.